All right, traders, good morning, good afternoon, good evening, good day, whatever time it is, wherever you're at. Welcome back to the New York Live Trading Room, to Tier 1 Trading, New York Live Trading Room. How's everyone doing today? Can you see my voice? Can you hear my screen? Good morning, YouTube and TradingView as well, as you guys are joining us for the trade of the day. Good. Before we get into it, got a cool update for you. We're going to bring over the economic calendar because, as you can see, today is a very important day. Today's the day we've been waiting for. But we had a cool team meeting yesterday, a random team meeting that actually went for almost 2 hours, and I got some pretty cool updates that I can't share with you the specifics of yet, but we're waiting on basically one more thing before we can roll out 2.0 of the platform. Some of you guys have seen it already. The quizzes are up there. The leaderboard is up there, right? Some of the point system, some of the fun stuff in the background is up there. To make things as least confusing as possible, basically the I don't know the fancy word. I'm not a tech guy, but the people that run the services that we use to create our website are they're doing like a reset sometime in February, where they said they're going to shut everything down for an hour. So we're just waiting for that to happen before we before we do anything, because Darren has a big fear. Darren and Charles have a big fear of making all these changes in the background, getting randomly shut down, and then having it not be saved or whatever. So they're waiting for them to give them a time. They just said sometime in February, but yeah, lots of cool things happening, including some other stuff that I really want to tell you, but I can't because I don't want to be the person that like says stuff and then maybe there's a chance of it not happening. So I'll just keep my mouth shut. But I like the leaderboard. I'm glad you guys are enjoying the quizzes. The feedback has been amazing on that. And that was an idea that we had, and it worked pretty well. Now, today, hey, Phil, today is news day. We talked about yesterday being a dull day in the market. Lots of consolidation as no one wants to kind of do anything crazy before the news comes out. Today is that day. We've got, now it's going to be after our live room session, but we're going to be able to use this session to prep for it. We've got Bank of Canada monetary policy rate statement happening at 10 a.m. We got their press conference at 11, and then we got the FOMC at 2. Now, and funds rate. Now, there's no expected rate here in the US for the 2 o'clock, although obviously the press conference is going to be major, right? Typically in these events, the press conference is the most important thing. That's when it's unscripted. You don't have your PR person writing writing stuff for you that makes sure you make sure that you say a lot but doesn't say a lot at all. It's kind of more open and honest. Bank of Canada is the one I had my attention on because, as we spoke about yesterday, right, this has been a very good pair with me as far as home run trades. And for you guys that are maybe outside the platform or new to the platform, when we talk about home run trades, we're talking more about hybrid trading. So we are technical analysts here. We look at fundamentals mainly in order to be aware, knowing when to stay out of the market. But every once in a while, you'll get a situation where, if you're familiar and knowledgeable about fundamental analysis, where the fundamental bias lines up with the technical bias, and you can kind of shoot for larger targets, larger moves in the market. And today may be one of those days. Now, I still have no idea why Forex Factory hasn't updated this. I don't know what it says on other economic platforms. But there is I think there is a very high percentage hike that there is a rate hike today from Canada. Canada tends to come out and they do what they want when they want. I think there's a legitimate chance that there is a hike. And if you look at the market this morning, right? Yesterday, we saw bullish movement followed by consolidation. I'll go over and bring the dollar Canada chart up. We saw bullish movement followed by consolidation yesterday, right? What did we start seeing today? What did we start seeing today, right? We had bullish move after our head and shoulders. This is one of our trade of the weeks last week. We started seeing some bearish movement, right? So someone knows, right? someone knows. I think you're seeing a lot of preparation for that move. So if you are someone that is shooting for a home run trade, I think the bearish route is the route to shoot for. Now, again, this can be the complete opposite. If nothing comes out, you're going to see a correction as well. So it's I guess we're always doing educated gambling, but this is you're not just getting short to get short. Again, you always want to make sure you have a technical reason to do so. But if you happen to have a technical reason on the low side or on the short side, it may be one where you hold a partial position for extended target. So what we're going to do this morning, the trade of the day is going to be here on Dollar Canada, but we're going to spend some time on different Canadian pairs and just look at the different opportunities that happen. And if there are some home run trades setting up, potentially bring them to your attention so maybe you can take advantage of them. So there's two situations here on Dollar Canada. We're actually going to start from the lower time frame first. This is one we talked about yesterday, and this is going to be in the opposite direction of what our projected news event is. And this is going to be the bat pattern, right? You guys remember this from yesterday? Raymond brought this up to our attention. We actually had two potential ones, but we ended up going downward. This is going to be our X to A, swing low to swing high. Nice impulse leg here. A to B right there. Our B to C right there, and our CD completion coming right down into this 886. Now, the bad news is this, guys, and this is where you have to be a disciplined trader, right? So I'm involved in this bet. I'm long. I have a bearish bias on this Canadian news, right? I do think that they're going to give us a surprise rate hike, and I do think we're going to see some strength on Canada. So the question is, Akil, why are you in the trade? And that is a question that probably every new trader is asking. Akil, if you have a bearish bias because of a fundamental news announcement and you're in a bullish trade, what the hell is wrong with you? And the answer would be what? And it's a perfect example to you newer traders. Real quick on YouTube, Caesar says, enter the double bottom on pound dollar. Hey, I'm in that as well, Caesar. Did we talk about that yesterday? Was that our trade of the day yesterday? Pound dollar? First target hit, now second and third is on break even. Very nice. Reducing risk. That's the key to trading, right? Risk management. The saying goes, good traders are great risk managers. Well done, man. So the reason I am in the trade is because it's part of the plan, right? It is part of the plan, right? My trading plan says I take every valid bat pattern, right? There is no technical reason not to take this bat pattern. The only reason not to take this bat pattern is a hunch I have about a fundamental news event. I am not a fundamental trader. I'm allowed to have fundamental opinions, but I can never base a trade off of fundamental analysis. I have a very hard stance on that, right? I can never base a trade off of fundamental analysis. Now, I can adapt a trade to fundamental analysis. Again, talking about the home run trade. If I was in a short position and I have a bias on a fundamental news event, I can adapt that trade and shoot for bigger targets, but I cannot take a trade based off fundamental analysis. And when I say cannot take a trade, it would be the same thing as, hey, staying out of this trade. Now, what I can do with fundamental analysis, I'm not allowed to enter a trade, let's say 5 minutes before a rate statement. That's a different story. That's avoidance. But I can't all of a sudden switch my trading strategy. And it's important. It's going to seem crazy to a lot of you until you really understand the concept of discipline, rules, and edge. And the unfortunate reality of trading is that sometimes you got to do things that you may not agree with. Have any of you guys ever taken a trade that met the rules of your plan, but you didn't really want to take it? Maybe you didn't like the location or the risk reward. I guess the risk reward wouldn't have been off, but maybe, I don't know, for any reason. Yeah, we've all done it. The funny thing is, right, I feel like most of those trades end up winning and it ends up reconfirming your rules, but it's part of the plan. So I'm in it. We'll see what happens. Who knows? We can spike up before the news event. We can spike up during the news event. Doesn't mean that this is going to be a loser. News event may not even happen the way I think, and we may fire up the opposite direction, right? We never know. But I thought that was a good lesson to bring to your attention because that is what disciplined trading is about. And if you ever want to have long-term success as a trader, trust me when I say you have to be a disciplined trader. You can't just go around doing whatever you feel like whenever you want to feel like it. Now, let's talk about involving ourselves in a short if you are looking for a short. So if you're looking for a short trade, how can you involve yourself? What can you look for? And again, you don't want to force this, but let's just talk about the other side of things, right? So we know that we came off the head and shoulders pattern. Oh, and I'm getting the weird mouse thing again. Very careful if I click this. Nope, there it goes again. Here we go. Let's try this. Maybe time for me to buy a new mouse. There we go. Left shoulder, neckline, head, neckline, right shoulder. This was our breakout, came down to 125 just as we projected. Go ahead and watch last week's video at some point to see that. Now, this is going to be that retest of the neckline, right? So one of the ways that you can trade a head and shoulders pattern is waiting for a violation of the neckline, waiting for a pullback, and looking to get short. So currently we have an inside bar break. The bar before today's daily bar is going to be an inside bar. You don't have a lower low, lower close here on the daily, obviously, because the daily is not, the day is not done. Hey, Greystone. Just missed a good rant on doing things you don't want to do. Not in life, in trading. In life, hopefully you get to the point where you can do only the things you want to do, or most of the things that you want to do. So if you can find a reason to get involved, again, I would love to have one. I just don't, because I do have that bearish fundamental bias. I just don't, and I'm not allowed to force it. But if you can find a reason to get involved, this is a nice little pullback to the neckline of a head and shoulders. If I just go and extend, we'll go back to the daily and just extend this this line a little bit so you guys can see. Zoop. 1, 2, and then we'll do the horizontal version of it. Bang. Those were the location or locations that we needed to retest. We came back up to retest and we started moving our way down. So now the next question is this, right? If we're going to continue down here, again, this is, if you're just coming in, this is working off the bias of you're looking to get short dollar Canada. You're looking for the, again, I don't want to say an unexpected rate hike, because I do think it's expected. I just don't know why Forex Factory doesn't say it, but the surprise rate hike, right? Where are we looking for a move to? Give me some ideas, guys. Where are we looking for a move to? I want to put an emphasis again. I do not see a reason to get short per my rules. And again, I am long the bat. But again, what we're going to do today is we're going to go through some of these Canadian opportunities and see if any of these pairs have home run opportunities. But if we're going to continue lower, where do you think we can go lower to, right? We have to project. We can't just say, oh, you know what, I'm going to just take a trade and I'll see what happens. I'm a firm believer in that, you know, as a trader, investing is a different story. As a trader, we need to have a profit target. Now, if you're trading something like, let's say the S&P or some type of index and we're at all-time highs, a trail method would work just as well, right? Obviously, you don't necessarily need you don't always need a profit target in something like that, but you need a trail method. We need to have something to look for. Cody says, oops, sorry. Orgy says 124.50s, then 123 even. Let's draw these on. 120, what did you say? 124.50s? 124.5 right here at the lows, and then $24.24 even. Jagger says 124.60, so that same level of previous structure. Cody says 125.60s on his radar for longs, 125.60s right in here, so right at the bat pattern. 125 looks like a key level. 125, 125, 125. A lot of people liking 125s. Yep. I think this level of support down here is a great level. I think if you're looking for an extension, I like 124s as well. So perhaps a 125 or a retest of this previous level of structure for your conservative target, an extension down to our lows here for your aggressive target. You're going to see some cool things line up here, right? So if I take a Fibonacci extension, because we know we've been putting in equal measure moves. And actually, we may just measure another equal measure move here as well. Let me get my sticky mouse thing situated. Let's just see something real quick. So this was our initial 1-to-1, our AB equals CD down there. Remember, that was part of our projection. Another AB equals CD would put us there a little bit lower, down at 123.50s. Let's keep that on the radar. Let's take a Fibonacci extension from our most recent swing high to swing low. Right down here, we're looking for probably a 127. Look at that, 127 extension down there as well. And one more thing, right? Let's take our fixed range volume. Let's take the volume of this most recent swing low to swing high. Right up here. Notice anything? Sorry, over on Trading View, 25.50s, 125.50s as well was the prediction. Sorry about you guys. I got locked in. 123s over on YouTube, it said. Stewie says Cody would have entered at the right shoulder if he did take this trade. Maybe, maybe not. It wasn't a Cody special. I actually do believe he was looking at this level, but for a different reason. But it wasn't a Cody special. But yeah, so big spike right down here at the top of this level, right? So we have our 127 and our AB equals CD around 123.50s. We got this volume spike a little bit higher, 123.80s, right? I think that level is a great level to look for as far as an extension if you're looking for extended targets. So cool opportunity here in Canada. Again, 10 o'clock is going to be our rate statement. 11 o'clock is going to be our press conference. Any questions from YouTube or TradingView before I ban you guys for life? And by life, I mean until tomorrow morning at 7:30 a.m. I just like screaming banning for life. It sounds cool. But any question for you guys? I know it's a little bit of a delay, so I'll give you a little bit. Tier 1 members, we'll dig into, again, more candidate pairs, or of course, if you want to dig into this a little bit longer as well, let me know. Cody says, I like to see a slanted shoulder creating a lower low. Yep. So we needed the opposite. We needed this shoulder. What pair? We just had one yesterday on a pair, Cody. You can see how you were in here for it. I forgot what it was. I looked at it a lot yesterday. But yeah, Cody likes to see the right shoulder or the right neckline. Give that be lower than the left one, because then he can use that right shoulder as the same way as a normal pullback. Please do a video on ATR. The request line is open. I don't. What would you like a video on ATR on? What would you like to know about ATR? I can probably answer your question right now. If you do it really, really quick. Average true range. Please do a video on ATE. I have no idea what ATE is. What's ATE, guys? Oh, ATR. What would you like to know about ATR? If you ask your question on ATR, I will answer it right now. I promise you, but only if you're quick. What would you like to know? There's a little bit of a delay, so we'll give them some time. Sneaky Canada. What is ATR and how to play stops with ATR? ATR is the average true range, so it gives you an idea of the average movement in the market. If you're going to play stops using ATR, what you want to do is you want to use a multiple of that ATR. So let's say that your rules say you want to use a 1 ATR stop above entry. So you would take your entry and then you would add 1 ATR, and that's where your stop loss would go. So let's say you have an entry on dollar Canada at 127 even, and your rule says I do a 1 ATR stop. If your ATR is 20, that means your stop would be 127.20, because it would be 1 ATR above the 127 or your entry reason. And of course, you can do any type of multiplier. You can do a 2 ATR stop, a 3 ATR stop, a 1.5, 1.3, whatever is to your liking. But it's simply, it gives you more of a dynamic stop loss than just saying like, hey, 1 pip or 5 pips or 10 pips. It gives you something that's more related to how price is actually moving. So more related to the current volatility, if you may, of the market, right? If the market has been moving a lot more in bigger ranges, right, your ATR is going to be bigger. So you're giving yourself a little bit more cushion for a stop loss in a market that is moving larger. If you have a market that's been moving in a small range, your ATR is going to be smaller. You may not need that super big cushion because the range of the market hasn't been that big. So there's no need to take on more risk than necessary. So 1 ATR would be whatever the ATR is. So if the ATR is 20, 1 ATR would be 20. 2 ATR would be 20 times 2, so 40. 3 ATR would be 20 times 3, so 60. So 1 ATR would be the actual number of what the average true range is. And then everything after that would be a multiplier. So 2 would be 2 times, 3 would be 3x, 4 would be 4x. Here's the daily cameo from my kid. All right. Hopefully that makes sense. If not, come get on the platform. We'll teach you about it. But we use ATR stops all the time here. But TradingView, YouTube, thank you guys for joining. As always, hit that like button